Alright guys, welcome once again to my channel Proper FX99. Proper FX99. You get it? Yeah. You can just search for me on YouTube when you click on it. Once you click on it, if you want to follow my channel, look at the videos I've posted so far, go through all the stages, at least from day one. Once you're able to go through all of them, so here, this is my name, but just type Proper FX, you add 99. You get it? Proper FX 99 SMC Forex trading. Once you click on it, right now we have only 27 subscribers. In fact, we need more. Just bring people on board. So I have all these videos uploaded. Click on it. Just click on it and you have all my videos in place. And with the videos, if you are new to Forex, maybe you already have knowledge in Forex and you want clarification at a particular point. This is, you just go through and you select what you want or what you need. All right. But if you are new, I will gladly suggest to you that you start from this video. The first video, I don't have any number attached. But the second one actually starts with the explanation of Forex. So that one too, you can just start from there. Watch sequentially, progressively, because I've built it in a way that it is going to at least give you the foundation right from the start, what you have to know. Yes. And this particular video, if you are watching it, don't feel intimidated or don't tell yourself you don't have any knowledge. Why should you start with this? TradingView, it is just a platform. Yes, just a platform. But at the same time, once you start watching these videos, maybe 3 of them, you can start, at least you can come back to the first video and watch it again. But the first video is very key. It's very, very key to your success because I will always and always recommend TradingView for your analysis. One of the best charts, the best trading platform for analyzing at least the chart so far. Yes. Okay. So today we are going to, I just want us to focus or explain some few things. You know, based on your character, based on your lifestyle. Let's switch to, I just want you to have a view, a knowledge about the kind of trader you can be. The previous videos, I've already explained technical analysis. Those are the analysis parts. How you approach the market. We have technical analysis, and we have the fundamental and the sentimental. You get it? So the technical, we just look at the chart, this chart. What I've been doing so far with this, those are the technical parts. We just analyze from the chart perspective. The fundamental to what we do is to look at certain economic principles like the news, what is happening, especially the war between certain countries. If you are now you can see that we have price in full, right? Because there is a war between the Arab country. You get it? There is a war between them and possibly the US or Israel. And because of that, it is affecting the fuel flow, which means fuel price is also being affected. All right, that is the economic part, the fundamental, which means in the long run, if you have fuel price is going to go high. That is that part in the long run. And at the same time, if you look at the sentimental, it's about sentiment, people's emotions, how people are seeing the market. If majority are telling you, the majority favors the downflow, you understand? If the majority are saying market will go up, you get it? Once majority are in favor of the downtrend, those people are just taking or making the analysis from what people are saying. That is it. Okay, so you can see, just look at this chart. We have the long trace. I just went to a market on forexfactory.com. Under the market, you see that you have short trace, right? This short trace is at just telling you that within this chart, 54%, that is 88 traders, are saying this pair Euro USD is going up. And here 75% traders, which is 46%, which means here 75 is greater than 88, right? And the percentage 46 is 46%. Oh, okay. 75 is less than 88. Yeah. And 46 is less than 54, which means currently on this particular pair, there are so many buyers. Many people are supporting the upflow. If you take Euro USD, when Euro is strong, the price go up. And when the USD is strong, price goes down. And people are saying from this perspective that the price will be going 54% means the bullish, they are in favor of price going up now. And this is just sentimental, but it is not just sentimental. At least this is speaking from like the trades people have executed so far. And based on this, somebody can just decide when it comes to the Euro USD, one price is here. You will just buy, targeting price to go up. Yes, you will just buy. And what I explained earlier, so in my previous videos, I just explained that for you and I, we are combining all the three. You get it? Yes. But purely, we are just focusing on the technical part. And the fundamental part will also come in. But if you get your technical part right, at least you have everything in line, everything in place. So that is the combination of the three. So the focus in this particular video is like the kind of trader you are going to be. Who are you? What trader are you going to be? We have different types of traders. One, let me use the comment. So we have position traders. We have the position traders. We have swing traders and the scalpers. Possibly you can talk about the retailers around that side. Okay, so the best explanation to this position, when we talk about position, it is like the multi-time frame analysis. You are coming from a bigger perspective, from the bigger to the lower perspective, you understand? So the position traders, they trade for years. Maybe somebody will place a trade from January and expect the trade to at least take profit or come out from the market in maybe the next year, January. If it is 2025, he is expecting maybe 2026. Somebody can even place for so many years, about 10 years, and the person will still be in. So if you look at this chart, let's look at the month. Okay, so this is it. With this particular chart, I've switched to the monthly time frame, which means each of the candle is 1 month. So you can see that here we had what this particular date will be between 2021. So this price was around 2021, and here price was let's say 2023, this zone. So somebody bought the market using the highly time frame perspective. He analyzed the market and realized at least maybe he placed a trade around this zone, expecting the market to go below this point, at least come below this point. You'll get it. So which means for all these months, and we've seen from 2023 to at least from 2021 to 2023, the person was in. So, and it's like within 2 years, right? Yeah, the person was still in. And once the person is still in within like this, the person is a position trader. You get it. Somebody too can, let's say from this particular side, he was in the market, or let's say when price go to this point, he was in the market. Let me mark that zone, just that zone. When price came to this point, he was in the market because one, we have already learned about marking our supply zones, supply and demand, and everything. Here was a fair value gap. So the person placed his order around this point and expecting the price to come down, and maybe around, let's say 2006. So that would be, here is what, around this point, 2010. So from 2010, somebody has been in the market for all this while, expecting at least the US dollar to be stronger than the euro. So here it means the person considers certain fundamental analysis, maybe based on the progress of US for the years past. You understand? Then he made assumption, okay, the dollar will be strong. US, they are going to at least have the economy boosted and things are going to improve. So the person based on his analysis around that particular zone and still within the trade. For the swing traders, the swing points, they are just like what I do, something like this. The swings, this is what we call swing. We have price coming down from here. You get it. These are the swing points. You get it. These are the swing points. For swing traders, they target, let's say, within the weekly time frame, the daily time frame, the weekly time frame. You get it. So maybe we saw that from at least from this side to this side, it took us 2 years. So within the week, somebody will come within the week, or let's say the days, like the current movement here. So the person places a trade from the weekly time frame perspective or from the daily time frame perspective. Okay, the person plays this trade from the weekly time frame perspective, maybe expecting all the way down here because we have a fair value gap and there has been a BOS. I'm not trying to explain what is happening in the market, but the whole point is the person is targeting all the way from that high to maybe this particular point. Somebody is in the market. You get it. That person has an extreme patience. The same as the position trader. With the position trader. Because for you to buy something from around 2010 up to this time, it means the person actually or doesn't know how to even trade technically. You get it. Or maybe he's just looking for something safer to do. So, and the same way for this one too, we see that one candle is just a week. It will take weeks, and even if you go down more, you see that here this candle, each of the candle is representing 1 day, just a day. You get it? Okay, so this part, to be a trader, you just have to focus within what you can do best. And the last part is the scalpers. Scalper. Somebody is a scalper. The person is a retailer. The person does not last much within, let's say, up to 1 hour. Even 1 hour, you can be, that could be a swing trader. I'm trying to zoom in, but it seems I'm having my chart behaving in another way. Okay, like this. So the scalper, he did his analysis here. There was price was coming all the way. It came here, made this high, came here. Then instead of price from this point and this moment, within the 1 hour time frame, talking about 1 hour time frame. So right now we can see that we have a clear change of structure around this zone. You get it? Within the 1 hour, clear change of structure here. So maybe the person is actually, somebody will be targeting some few short down movement to all the way to this move before possibly going down. So around this zone, maybe the person is looking for an entry, but within the smaller time frame, 1 hour, the scalper, the whole idea is you don't stay long. You don't stay long in the market. That is for the scalpers. You don't have to stay long in the market. Some people, they trade in the 5 minutes time frame, the 15 minutes time frame, and the 1 minute. Okay, so that will be the end of this video. So choosing a particular style of trading, with time you get to know yourself. Maybe you are the type that is busy at work. You like to you analyze the market in the morning, you place your trade. So you take almost the whole day, or maybe during the whole week, you just place only one trade. Yes. And that will, you go with the swing trading. At least the swing will help you. And also, if you are something like a scalper always has time for the chart, because he is looking for entries within 5 minutes, 15 minutes, 30 minutes, wherever price or yes, whenever there's an opportunity within that chart, and when they enter to, it doesn't take them long. Maybe from this point to this point, that is all. He is done. Yes. So that is scalping. The position trader, as I said, depending on certain, you can buy something for a long term, for years. You are a position trader. Some people, they have their money in the banks for so many years, 10 years, 5 years. By for the difference here is mostly the risks involved. If you are within the short term and you are good with the chart, you get like enough money. You can make like effective use of the chart, because just look at it. Let's say, okay, a trader, a position trader will place just one trade here, or let's say a swing trader, one trade here, and expecting the market to go all the way down. You get it? The scalper will target from here to this point, then exit, then wait for retracement. Price will come here, and at the same time enter again from this point to this point. Wait for retracement. Price will come here, just like that, until price goes down. If price should go all the way to this point, the scalper, or maybe the swing trader, let's use the scalper, he has the ability to change his decision, like follow the flow of the market trend, the new trend, up to the new area. And if there is any news coming, like you can just have one big news that will move the market right from here to this place, and it will just take you out. So following the chart in something like the smaller time frame, the 4 hours, the 1 hour, yes, it's also beneficial. But one disadvantage is if you are not good with the chart too, because here the person is losing only one, position trader and the swing trader, they are just losing once. If you don't manage your your loss sizes well within this flow as a scalper, you can also lose more. You get it? Yes, you can also lose more. So those are the pros and the cons. All right, so position traders, as I explained, time frame, weeks, months, and even years. Their focus is based on the fundamental analysis and the technical charts. You get it? They just use the technical chart for entry, so that is all. Then the swing traders swing the days to weeks, as I explained. You understand? So they use technical analysis like support, trend lines, and candlesticks. Now, for at least making higher trends. At the same way, if you look at the scalpers, seconds to minutes and rarely hours, just some short term, and you are done. All right. Thank you, guys. Thank you very much. I hope you have understood and you've got at least this concept. What kind of trader are you going to be? Do you have enough time? If you haven't liked my video, please like, comment, and subscribe. Share this video with others. Let's improve at least this particular platform. Let's support each other.